Today, crypto rebounds from yesterday's sell-off, and Grayscale Zach Pandl discusses the launch of the asset manager's latest spot crypto ETF in the U.S. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Crypto markets on the rise this morning. As of noon Eastern, Bitcoin climbed back above the $90,000 threshold. Ether jumped nearly 10% to just under $3,000, and chainlink jumped more than 12% to $13.24. Now, Tom Farley, the CEO of the crypto exchange Bullish, joined CNBC's Squawk on the Street this morning to discuss his take on Bitcoin's move back above $90,000 after trading below that level for several days.
The volatility is real. The volatility is here for a long time. You know, when you think about Bitcoin in particular, a simple way to think of it is there's 160,000 Bitcoin that are mined each year, 2025, 2026. And so you have to find an incremental buyer of that roughly $15 billion worth of Bitcoin. And in the first 7 months of last year, MicroStrategy alone covered up that 160,000 Bitcoin buy. They bought 180,000 Bitcoin. And in the last 5 months of the year, they only bought around about 20,000 Bitcoin. So you pull out that marginal buyer, you're going to get more volatility, you're going to get more downdrafts. So it's not entirely shocking, but 90,000, we are where we are. I'm still a long-term bull. Bullish holds 24,000 Bitcoin. We continue to hold those Bitcoin. We'll see where it goes from here.
Okay, let's talk about some of the stories that could be boosting cryptocurrencies today. Vanguard will allow its clients to invest in crypto ETFs. The investment manager announced in a press release yesterday that it will allow most third-party crypto ETFs on its brokerage platform, saying these products have been tested through market volatility, performing as designed while maintaining liquidity. Vanguard told us that the included ETFs and mutual funds will be those that primarily hold underlying coins with broad market acceptance, not meme coins as defined by the SEC. The firm also said it has no plans to launch any of its own crypto ETFs or mutual funds. Now, the investment advisor is the second largest issuer of ETFs in the world. The largest is, of course, BlackRock, which launched the IBIT Spot Bitcoin ETF in January of 2024. IBIT is now the largest Bitcoin ETF by assets under management, and BlackRock is the largest holder of Bitcoin. Next, sticking with TradFi adoption, Bank of America will begin endorsing crypto ETFs for select clients. The firm's chief investment office will start recommending a digital asset allocation of 1 to 4% to interested Merrill, Private Bank, and Merrill Edge clients. Beginning January 5th, the company's advisors will be able to recommend a handful of Bitcoin ETFs from different asset managers. The company's head of investment solutions group says the update came from a growing client demand for access to digital assets, while its chief investment advisor emphasized the allocation is for, quote, investors with a strong interest in thematic innovation and comfort with elevated volatility. Crypto ETFs have been available to Bank of America clients who met a certain wealth threshold since 2024, but these select funds would be made available with no net worth requirements. All right, sticking with crypto ETFs for our main story. Today, Grayscale debuted a spot crypto ETF tied to Chainlink. I spoke with Zach Pandl, head of research at Grayscale, about this new investment vehicle and others the crypto asset manager recently launched. Today, Grayscale is launching the first Chainlink ETF in the U.S., which is a conversion from your existing Chainlink trust. And it certainly is not Grayscale's first trust to convert into a spot crypto ETF. So I want to start off by asking, what was the main driver behind Grayscale's decision to launch this ETF specifically now?
Well, the reason to do it now is that Chainlink is really at the center of the tokenization vision for markets. Tokenized assets are really small today, but we think will increase many times over the next 5, 10, and 20 years. From a $30 billion industry, to a many trillion-dollar industry in not that distant a future. Chainlink is the software provider that's going to really bring that tokenization vision to life. It's already critical infrastructure in blockchain-based finance and decentralized finance. And as we move more and more of traditional assets, stocks, bonds, real estate onto the blockchain, Chainlink really is going to be a critical piece of bringing that to fruition. So we're thrilled to be able to bring this product to the market as an ETF, the structure that our investors prefer, to allow them to invest in this tokenization thesis very efficiently in the ETF wrapper.
Expanding on that, why should investors want to put their money into this product when there are so many other spot crypto ETFs and other ways to invest in crypto out there right now? What's the investment case there?
Yeah. We call it the crypto asset class. We could call it the blockchain asset class. Everything in the asset class is somehow related to public blockchain technology and the transformations that that's bringing for digital money and digital finance. And investors are building these assets into their portfolio to try to provide diversified sources of returns. Investors that we speak with, no one has just a crypto portfolio. They typically have stocks, bonds, other alternative assets, and crypto is a element of the portfolio, an alternative asset class that can provide diversified sources of returns. So the reason to bring in Chainlink into that mix is to get the broad breadth of exposures that the crypto asset class offers. And some of that is Bitcoin and its macro thesis, its digital gold use case. Some of that is Ethereum and the stablecoin applications that Ethereum facilitates. Some of it is Chainlink and the process of tokenization. So public blockchain technology has a wide range of use cases. Investors are looking for an exposure to all of those types of use cases in a portfolio. Chainlink is an excellent additional ingredient to bring into the mix.
So we're seeing all these spot altcoin ETFs hit the US market. In fact, your new Chainlink ETF is one of several of Grayscale's conversions of a crypto trust into a spot ETF following recent launches for XRP and Dogecoin ETFs. We're also seeing other asset managers launch spot crypto ETFs tied to altcoins here in the US. One example, in late October, Canary Capital launched the first US-based Litecoin ETF in the US. Do you expect we'll continue to see these altcoin ETFs pop up here in the US? And are you noticing demand for these products?
Absolutely. And Grayscale has offered access to all of these products through our private funds business for a number of years. As you mentioned, our Chainlink product actually started back in 2021, but now we're able, under new regulatory guidelines, to bring that to market as an ETF. So we are active in all of these products and many others throughout the crypto asset class. As the regulatory outlook shifts, we're going to be able to bring more and more of those vehicles to market as exchange-traded products, really the most efficient product wrapper that's preferred by investors. That process has gotten started this quarter with Solana, XRP, Chainlink, as you mentioned, and other products. And we can expect a significant increase in the number of additional altcoin ETPs available in the market next year. That being said, I do think that institutional investors will be fairly selective in terms of which assets they are deploying capital to. Institutional investors are going to look hard at the fundamentals, look hard at the use case of each of these assets, and I think be more targeted than maybe retail investors have been in the past, and only pick the assets that they believe really have a strong long-run investment thesis. I think Chainlink is an excellent example of that type of project.
So BlackRock's spot Bitcoin ETF had its worst month ever last month. That follows the ETF's second worst month at $291 million in losses in October. What do you think are some of the factors behind these outflows? I'm sure the fact that the underlying asset has been experiencing a pullback is a big part of it, but what are some of the other catalysts in the mix? And is this something investors should be paying attention to?
The crypto asset class is being driven by two main fundamental sources of demand. One is macro demand for alternative stores of value, and one is regulatory clarity driving institutional investment and adoption of the asset class. And those pillars of the bull market, those drivers of demand, are still very much in place. Now, over short periods of time, of course, markets are influenced by many other types of things. And just over the last few months, to my eye, there's been a very big shift in expectations about the U.S. economy from booming, overheating expectations back in August timeframe to more concern about downside risk to the economy and uncertainty about the outlook for Fed policy. And that has had an effect on lots of different frontier technology market segments, elements of the AI trade in equity markets, quantum computing, et cetera. And crypto has been part of that. So the weakness in price over the last couple of months, the outflows from some ETP products, I think reflect a broader shift in risk-taking by investors, not any change in fundamentals for the crypto industry or asset class itself. We're going to see how this unfolds over the coming months, but I think that there is early indications that the market has potentially found a bottom. And I believe institutional capital will continue to enter the crypto asset class over the coming month and year, and that will ultimately support valuations.
So you just mentioned something very interesting. You said that cryptocurrencies could have potentially formed a bottom. So do you think prices will fall even lower? Or do you think Bitcoin and Ether stand a chance to recover in the last few weeks of the year? If so, what would it take?
I think we are likely to end the year higher than where we are today. Now, kind of calling short run price movements in markets can be an occupational hazard, but I do think that there are reasons to be optimistic on the macro side of things. One is the upcoming FOMC meeting, where I think that they are likely to reduce rates further. We may also hear President Trump's nominee for the next Fed chair, who will replace Jay Powell. So potentially, more accommodative monetary policy expectations supporting crypto as well as other asset markets. And the second positive catalyst that I would anticipate towards the end of the year is more bipartisan progress on the market structure bill. We already had a big piece of bipartisan legislation back in July, the Genius Act targeted at stablecoins. We're seeing more bipartisan efforts on market structure legislation. If we see not necessarily signing that bill or passing it into law, but more progress on that legislation before the end of the year, I think that that would be a very encouraging sign for the crypto asset class. So my expectation would be that we probably have reached bottom locally for the year, and we will end higher. But I would just emphasize for investors that, of course, there's always risk, and investors should focus on the longer-term fundamentals. Macro demand for alternative stores of value and regulatory clarity driving institutional investment. As long as those two things are still in place, we can expect generally rising valuations for the crypto asset class over time.
Now, Pandl also weighs in on 2025's digital asset treasury trend. You'll be able to check out that full interview over at cnbc.com/cryptoworld. Okay, that's all for today. We'll be back again tomorrow, and we'll see you then.